The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out where the markets are at right now. I'm your host, Darrell Martin, right here on TFNN. And you can watch our screens live at TFNN.com on Tiger TV or listen to us on the web at TFNN.mobi. All right. So looking right now where the markets are, we got the S&P. It's basically flat on the day, but there's definitely been some movement. We'll go back and look over that. Had some nice deviation bounces. Looking at the Russell, we got the Russell down 6 points. Right now, pulled back from bouncing off a -1 deviation level. We got the Nasdaq down 9. The Dow is up 14 points. Copper currently up almost 1.5% on the day, so some nice moves there. We got gold is down just a point at the moment. We got silver is running up a little bit, so up about 0.5% right now. Natural gas up nearly 1%, and oil down basically 0.5%, down about 50 cents on the day, a little over 50 cents. We got corn up a few points. We got soybeans up 14, so a nice move in soybeans. Like I said, a lot more consistent movement there you can usually take advantage of. We got the euro dollar. It is currently down 39 pips. The Aussie dollar is down 58. Pound dollar is down just 9. Dollar franc is up 40. Dollar CAD up 61 pips. So some nice movement in the dollar CAD there. We got the dollar yen is up 57. The Aussie yen is currently down 9 pips. Euro yen is up 40. Pound yen up 73 pips on the day. And believe it or not, that dollar CAD moves a larger move at 40 pips than the pound yen at 73, just on the price ratio percentage basis there. And we got the euro pound. It is currently down 0.25%, down about 13 pips on the day. So that catches you up on where all the markets are at. And let's see what else we have with the news, because I want to get you caught up there. So let's look right over here, and we'll pull up our news calendar. This is a big news week. I talked about this last week. A couple things were brought up. Said, one, of course, we had that low volume. Two, we had that low VIX. Okay, we're expecting the VIX to turn a turnaround, and it's starting to move up. I wouldn't say it's exactly spiked yet, but it's working on it. So it's thinking about it. So it's moving back up. It might get back above 12, going on to 13, 14, maybe 15. We'll see. And just to show you that seasonality chart there on the VIX and what we're looking for, and I'll pull that right up on here for you using the Thinkorswim platform for a seasonality basis. And you can see where this pool starts, or the VIX starts running up. That means fear starts going up. That means the market usually starts going down, has a small correction, maybe a big one, who knows. And but anyways, a correction nevertheless, and that pumps premium back into the option markets. I said last week it wasn't the time to get in and cover yourself if you were in long positions on any kind of equities while that premium was cheap before the market pulled back. And looks like so far that was a good call. Because we see the market's doing a little bit of a pullback today. Not massive, but that volatility is getting more expensive. That premium's going up right now. And the big thing is we got a lot of news happening this week. So with all that news going on this week, what can you do to take advantage of it? That's what we're going to talk about. We're going to go through it. We got a lot of interest rate announcements coming out. We got retail sales coming out. We have NFP reports coming out. So there is a plenty of news for us to take advantage of. So first thing, I guess we can go in. We can dive into Aussie retail sales. It's going to pop on out tonight. And let me see what I got on my calendar. And we'll put the plan together for you, okay? We'll pull it up and put it together piece by piece. All right, so Aussie retail sales is going to be released tonight at 9:30. Obviously, looking for an impact on the Aussie dollar or Aussie yen. You can look at either one. And let's see, going into retail sales as our main focus. And then I'm going to pull up how far is it moving and how do we take advantage of it. And I guess simultaneously what I'll do is I'll look at Aussie yen, something we haven't done a whole lot of. But see if there's anything there we can take advantage of as well. And we have spreads on both of them. Or actually, do we have? Yeah, we have spreads on. Let me pull it up. I'll show you. But we have a variety of spreads you can take advantage of. So just a matter of putting that in there. I'll pull up the scanner, show you what I'm talking about here. It's taking a second to load. There we go. All right, so with the retail sales, the movement's pretty small to begin with, which is good. I'll go back. What I do is I look at the last 12 months. A lot of people, they get this habit, and I started this way. When I first started doing news trading, I look at every red news report. Well, I started learning that sometimes there's yellow reports and orange reports and red reports that can be big, and likewise, there's plenty of those that can be small and nothing happens on them. So you want to make sure you are looking at a variety of them, and you're looking at all the stats on it. And you're looking at the right stats, not just stats, but the right stats, not just the high to low moves. I started off looking at that, and it's like, well, I realized, okay, well, that helps me to a certain point, but I really need to pick the right expiration and I really need to know the right time to get in. So how far does it move before it gets in? And I need to know, high to low before it gets in is helpful, but I need to release to high, release to low afterwards, really to have an idea of what kind of trade this should be, because I could have a 60 pip high to low, which sounds like a great straddle, but if it usually goes up 30 and then down 60, so it's up 30, down 30 really from where it released, that doesn't help me a whole lot on a straddle. So really knowing those numbers and, how to use them. The only two pairs I forgot they don't have the spreads on that are Aussie yen and Euro pound. So we can't do Aussie yen, unfortunately. We can do it on binaries, but they don't have it on the spreads. So if you want those on the spreads, then let Nadex know. And the way you do that is you log into your account under My Account in Nadex, and you submit it and let them know. I've been telling them, you tell them, if you think that you would like to have the Aussie yen, so you could be trading that on the news, that they'd go ahead and get those spreads going. That's the only two markets they have that exist that they don't have them on. So it doesn't make a whole lot of sense that they don't have two markets out of all of them. Now, copper and, those are closed, but I see in Euro pound, they literally just have them on binaries. They don't have them on spreads. And I've not got a clear answer as to why. But anyway, so that way to let them know. And it actually does make a big difference. I'm working on a project right now, trying to put some stuff together. And, I submitted a lot of suggestions. They do put a lot of those things into place. They do listen. So, just, of course, they want to know that it's actually something that's in demand before they go and make a big market for it and file everything and, all the fun pieces that go with that. All right, so back on topic over here. Looking at the upcoming reports and what we have. This is a small report compared to the big reports that are coming out this week because we got a lot of headlines coming out. But we got, let's see here. You have your retail sales. And on your retail sales for tonight, and I guess we'll just focus on Aussie dollar. Go in and look at this. It comes out, like I said, at 9:30. We had 7 pips. Then we had, and I'm looking for basically an 11, either a 10 or 11, okay? A clock expiration. So probably leaning towards the 10. So that put us at, towards the 11, I'm sorry. So that put us at a 300 expiration. So on a 2300 expiration, 28 pips. Then I'm going to have to stretch this chart out a little bit further. And some of these render way too fast to be able to show them up on the screen. So you just have to roll with me and know what I'm focusing on right here. I'm going through and I'm looking at basically the last, I'll show you here, all these reports for basically the last 12 reports or more on the retail sales, how much the market has moved, pips up and down, and just putting all those pieces together. About 30 pips the report before that, about 25. Now I've seen 50 pip spikes, but usually it pulls back. Okay, so consistently again and again, I've seen those spikes, and then it pulls right on back. Got 7 pips the time before that. We have about 20 pips the time before that. Let's see here, 11 pips. And let's see, 30, what is that, 23, 30, about 35 pips. And let's see, okay, one big report, 56, then 15. So we really only had one report that was that large. And a lot of 30-pip moves, which basically tells me that I'm really going to want to be able to bring in probably at least 40 pips on this trade. And that might be pushing, maybe a little hard, but we're talking about getting in at 6 o'clock. And I'm trying to see if that's even still realistic. So that's that'd be if I got in right before the trade. So I got to look at several things. I have to look in, what does the market do after the release? But then if I wanted to say, well, what if I got in at 6 so I could have hours of additional premium that I can collect over the course of, basically I'm doing an iron condor, intraday. So what would happen if I did that? And would I still be able to be profitable? Because remember, the market's it's not just going to stay there, so it could easily move. Some announcements, the market will move a lot before a news announcement comes out. Other announcements, it'll barely move at all. And a lot of times, the higher the impact of the news announcement, the less it'll move, because nobody wants to take a big position leading into that news announcement. And so right now, I'm just going through, I'm scanning through, and this is actually a pretty quiet announcement. It actually helps you more often than not. I would say it actually helps you to get in early. Every once in a while, it may have got you by like 5 or 10 ticks, but a lot of times it actually would end up making you more, because what it'll do is they'll be flat, and then like about 30 minutes before, it'll start moving. You'll get some movement one way or the other, and then it'll just pop one direction or the other. A lot of times back to where it was. So looking at just the history, like that one big report where I said, that would have got us like at 60 pips, we actually only would have had about a 25-pip move if we would have got in at 6 o'clock. So now there's a couple times where I saw we had a 30-pip move that we would have had a 40, so maybe it would have been break even on that. If you can get, I'm going to say $35 is your minimum, okay, based on all the stats I'm looking at. And a lot of those trades are going to come out way ahead, but over the last 12. So $35 minimum profit, Iron Condor on the Aussie dollar, entering at 6 for the 11 p.m. expiration. Okay? Now, if it's really cheap, you could consider going in and seeing if we have a pop on the trade. And if we do, then, consider maybe doing a strangle or whatever if it's just really, really cheap, or a straddle. Is always a possibility. So when I say the Iron Condors and I tell you the amount, if it's just too cheap where, it's only like $10 or $15 or something, well, that's where you might want to go in and consider going the other direction. But for the simple trade, $35, minimum profit, buy the spread below, sell the spread above for the 11 o'clock expiration, okay? And then just watch the paint dry. All right, sit right there. We'll be back right after this. We got a lot bigger news announcements coming up later this week.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. All right, so what else do we got coming up this week? We have a lot of stuff coming out. We're going to have the Aussie dollar cash rate coming out as well, so that's something we have to take a look at soon after this, because that's coming out at 12:30 tomorrow morning, so really, same session in the sense. And we got an Aussie GDP coming out tomorrow night, so a lot of Aussie stuff right there. And then we're going to roll on into having the ADP employment change. We're going to have the overnight interest rate on Wednesday on the Canadian dollar. We're going to have the pound dollar interest rate. We're going to have the euro dollar interest rate. We're going to have the euro dollar press conference, which is usually the big piece. We're going to have, some building permits, CPI, but then the big thing being the employment numbers on Friday as well. NFP here, NFP in Canada happening at the same time. So, they don't call them the exact same thing, but they are. So the next one we really need to dive into, make sure we knock out, is we need to look at the cash interest rate. So for the Aussie dollar, again, that comes out at 12:30 this coming morning. So Tuesday morning, 12:30 a.m. Eastern time here in 11 hours. So what does that mean? How does that work? Well, usually it's going to inflate the premium, which can be a really good thing for us. Okay, that can make things expensive, which can make it very hard to do a straddle or strangle on. Sometimes it's not, but let's go through. Let's talk about it. What does it do? How much does it move? And really the only thing we're interested in is up to 3 o'clock. So we could look at 1 o'clock. We could look at, let's see, if it comes out at 12:30, that gives us 1, that gives us 2, and that gives us 3. So we really have, because at 12:30 we got 12 to actually, yeah. So yeah, we got 1, 2, and 3. We actually got 3 expirations right there in a row. Because we have the short hour, 2-hour ones, and then we have the longer one that started at 11 o'clock and went to 3. So just looking at initial releases real quick, just running through those for a quick scan. What I see is we got 3 a.m., about a 10-tick move, 11 ticks, 5 ticks, 87 ticks, so a big one right there. By the way, we covered like 50 of those in the first 5 minutes. So we knew really quick whether or not it was going to be a big move. The one before that, we had about 15 ticks. Let's see, 22 ticks. We had another 80-tick move, and again, we covered about, let's see, on that one, what was our high? Covered 37 ticks in the first 5 minutes. Okay? But we had one after that was 50 ticks. We covered 33 ticks in the first 5 minutes. There was a period there where there was a lot of interest rate like rumors and things happening that was causing a lot more volatility in the Aussie, and that was when that was going on. So right, as of lately, not quite the mover. Let's see here. We got 30 ticks now. It actually went down quite a bit, but on the first 5 minutes when we got 16, it went down like 65, but it came back and finished at 30 ticks. And then, let's see, we had a 23-tick one. That was a wild one. It literally flew up 25, flew down 55, and then came back up and then went back down. I mean, that thing was all over the board. So if you had to take profits in on that one, it would have been great. One before that, we had about 50 ticks. And by the way, we covered that in the first 5 minutes. So just looking at the stats, okay, we got 1, let's see, 2, 3, 4, 5, 6 reports moved at least 50 ticks or more. Several of those came back a little bit, but 6 did move about 50 or more. So that's going to make you a little bit nervous. What about getting in earlier? Would that have impacted it positively or negatively? Like if we got in at 11, even though the report didn't come out till 12:30. Let's see here. Basically giving you more time, okay, for the market to move, giving you more premium for that movement. So looking at that and seeing the movement, there's basically the market could go quiet. So that's something we need to really be aware of on the retail sales front, okay, is that come about 11 o'clock, if we haven't had our move, we're not going to have it, this is actually really in our favor for our premium collection trade on retail sales, because the market's going to do like a little gyration and then it's going to just go right back, probably right back to flat, would be my guess, because we're coming right into that interest rate announcement. Everybody's going to it's going to fire off and they're just going to level right back up, and they're focusing on the interest rate. Unless there's some big retail sales surprise, that should be, if we can get any premium on it, it should be a good trade. And then leading right into, right after that thing's over at 11, then we're hopping right into the 3 o'clock one. All right, stay right there. We'll be right back after this break. We'll try to narrow this down for you, okay?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so come on back here to the Diagnostic Trading Hour. All right, so we're going on through, we're looking at this, and it's talking about, the expected impact on the interest rate announcement. And basically it's about a 50-pip move, about 6 times out of the last 12. Okay? And a lot of those times it doesn't really come back that much, maybe 5 or 10 ticks, but a lot of times it'll keep going, like 20, 30 ticks. We've leveled off really about 50, 60. We've only had a couple that have moved like 80 pips off of it. So, I mean, literally we have like several literally like right at 50-pip moves out of those. So 50 to 60. Now, likewise, on the other side, we've had 10-tick, 11-tick, 5-tick, 16-tick, 22-tick, 51-tick, 64, 30, 16, 50. Okay? So, if you, ideally, what would be perfect is if you could get 50 ticks. I would say a minimum of 40, just so you sort of get a little realistic grab in there, but for it to come back. Because usually, I mean, if it doesn't, go the whole 50, in those first 5 or 10 minutes, most of the time it's going to come back in. You're going to at least be able to grab 20 of that 40, maybe 30 of that 40, total maximum premium. But if it goes outside of it, the furthest we've really seen it travel in the last 12 months is about 80 pips. So, you're looking at about a 1-to-1 max loss to max profit if you exit, if it went, the full amount outside of the range. But you lose the match you lose versus the match you can make. So, anyways, I'd look for about a minimum of 40, ideally 50, but a minimum of 40. And that's entering at 11 p.m., okay? And let's see here. Let me pull up one more piece on that for you. Just want to make sure you have that plan down and ready. And let's see. Nadex is changing up their site, doing all sorts of cool little upgrades to it. But anyway, so going on over here, just double checking my expiration hours. I want to make sure I got them right. And let's see, it's going to go out at 12. Actually, giving it to 7 a.m., that might really work because it could really inflate that premium a lot. I'm going to have to pump a little bit more time in there and see how does that impact us on additional time. But if I pushed it all the way out to 7, so in other words, we can't use that. I was saying 1, 2, and 3, and I was thinking 3 for binaries, but it's actually 1 o'clock, 2 o'clock for spreads, and 7 a.m. for for spreads. But if we were looking at the spreads on that, what kind of impact would that make going to 7 o'clock? And let's see here. Looking at 7 a.m. as my expiration. And does that hurt me? Does that help me? Looks like on most of these, it's not much of a difference. So, it'll maybe help me on one, and it'll hurt me a little bit on the other. 10, 20 ticks either way. Okay, so recalculating the stats and just looking at a 7 a.m. expiration. So there's a couple ways we can do this. I'm going to tell you the 50 tick one. I'm going to tell you that's for a 2 a.m. expiration. Okay, so getting $50, that would be getting in at 11 o'clock or 12 o'clock for 2 a.m. Because usually it's not like you get a massive run and then a massive pullback on this thing. Either it's just sort of flat or it moves. And so I would say, okay, we'll rewrite this. 11 to 1. So you get it at 11 o'clock for 1 o'clock. You can get it at 12 o'clock for 1 o'clock. You can get it at 12 o'clock for 2 o'clock. Okay? All of those are going to be 50 pip iron condors. Minimum profit. And I'm going to probably go ahead and stick with 50 on that. To me, it's just not worth pushing the 40 on the envelope. But, if you want to push it 40, you can. But so let's do the price again. Entering at 11 for 1, entering at 12 for 1, or entering at 12 for 2. Any three of those, you can do the iron condors. We're looking for 50. 40 would be a minimum, but ideally we want 50 or more on our premium. Now, what if we want to push out? We want to look at a 7 a.m. expiration. Let's see here. If I go through, got 50 ticks. Got 30, 45 actually, 13. Let's see, 100. So nice big move. 16, 93, 51, 42, 57, 38, 74. Actually, a lot of big movers by 7 a.m. So sounds sort of funny, but if they're cheap, then if you could get $35 to $40 as a straddle buy for 7 a.m., then that would actually be a trade I would consider doing as well. So, like I said, $35, $40 would be a max. We're looking for $35. So I don't know if the premium is going to be just way low or if it's going to be really inflated. If it's really inflated, we're going to go for those early iron condors, but it'd have to be really inflated for us to consider the 7 a.m.s because it usually does just keep on moving. And again, most of that movement happens in that first 5 minutes on these really big moving days. So we got iron condors for 1 a.m. and 2 a.m. and we have a straddle, a cheap straddle, like $40 or less for 7 a.m. on the Aussie dollar. Okay? And all those need to be entered. They can be entered as early as 11, maybe 12 o'clock if you're doing the 2 a.m., and then no later really than 12. Okay, so that wraps up our news plan for the Aussie for retail sales. It takes care of the Aussie for the interest rate announcement. We have a couple other announcements coming out early tomorrow morning. We have nationwide house prices and construction PMI coming out. And let's see here. I'll pull that up for you. We'll look at that. Expectations over here. And what do we got? We got construction PMI, and we got the national HPI right there. Not really the biggest mover, but as far as the construction PMI, how we might be able to take advantage of that one. A lot of people just ignore this report, so I'm trying to see if we can take advantage of it actually with doing some of these neutral trades. And from what I can tell, we'd have to be looking at, like I said, like 7 a.m.s most likely on doing this, just because unless you're going to be up really late. I don't know what hours you like to trade, but I'm usually not up at 4:30 in the morning when reports come out, like construction PMI. So looking at a 7 a.m. report, you got 20 pips. If you got out at 7, you got in at, let's say, got in at midnight, got out at 7 a.m. Let's see, 30, 25, 9. Let's see here. Got a 30, 25, okay. 35. And let's see, another about 25 on that one. The report before it is going to be about 50. Then we got 19. So you're really going to need a minimum of $35 or more, ideally, for a 7 a.m. expiration on construction PMI. That'd be entering, you could enter, I guess, as early as midnight. So 12 to 7 a.m., $35 minimum profit on an iron condor, straddling it. And I'm really not a big mover. It actually, what I can tell you is I've noticed that it does sort of wake up in the morning after this report comes out. You'll see some big moves a lot of times. But anyway, so that's our construction PMI. And you can really put the nationwide house index just in with the same trade because it's just rolling right across it. And we don't usually get big moves. So basically just lumping those two together. Nationwide house prices that happen at 2 a.m. and construction PMI that happens at 4:30 a.m. That'd be an entry at midnight for 7 o'clock. 35 pip minimum profit, and that's buying the lower spread and selling the upper spread. If you're wondering what I'm talking about when I'm talking about all this, go back and watch some of the archives. I walked through them. Even last week I spent one session. I just went literally through the Iron Condor step by step again. But hop on over here to TFNN.com, click on Nadex over on the right side of the page, and then go in and choose Trading Demo Trading Account. Okay? And then fill in your username, your first name, your last name, your phone number, and your email address, and click Apply for Demo. As soon as you do that, they're going to send you an email address, and you'll be set up, and you'll be able to log in. They'll send an email to, they'll send a password to your email address. And then you'll be able to go up here and log in and get started. And once you log in, you'll get $25,000 of funny money, and helps you get going pretty quick. Check out the scanner I've made. It actually feeds all the information in from the Nadex platform, makes it a lot easier because there are so many contracts to choose from. It can be really overwhelming. And so what this does, it takes all the contracts, it narrows them down. It doesn't tell you what to trade, but when you say, hey, this is what I want to do, you just say, hey, only show me stuff that qualifies. It'll narrow it down for you really quick and help you find the strategies. It does all the math. You don't have to click 25 times to find the best contracts. It's right there in front of you. Makes it fast, makes it easy. But anyway, so get that going. Also, check out their education section. They got stuff that's always going on to help you get going on that, like intros to, basics on binaries and things of that sort. And then when you're ready, open an account. It's $100 to fund a live account to get it going. Obviously, when you want to go live, you're probably going to want to put more than that in there, but that's all it takes to actually fund a live account. Big benefit is if you fund a live account and place a trade, whether that's 100 contracts in a trade or a single contract in a trade. Doesn't matter if you're risking $2 or $3 or if you're risking $2,000 or $3,000. If you do a live trade, you can call them up, and they'll extend that demo out for a year for you. And you definitely want to demo these. You want to learn how to use them. You want to survive long enough to figure out how it works, so that way you don't spend the money by jumping in too fast. But once you got it down, then of course you want to get going. But just make sure you got it down first, and I'll be glad to help you out with any questions you have right here on the Diagnostic Trading Hour. Feel free to call in anytime, and I'll walk you through the trades, and we'll set them up step by step. But anyway, so I try to give you the stats to help you out on this. Now, some of you go, I don't really trade the news. That's fine. You don't need to trade the news. Well, I'm not ready for learning how to do that yet. That's fine. But you need to be aware of when it's happening. You need to be aware of what kind of impact the market has. If I tell you that You think about some of these things. Okay, I'm going in going, okay, if you can do this for $35, that would be a good range-bound trade, meaning the majority of the time it doesn't exceed $35, 35 pips between this time and this time. So when I'm saying that, that means like, I'm not expecting 10 out of 12 times. I'm not expecting over the next 12 releases for that to happen. Well, if you're trading that currency pair that evening, and the market's moved about, say, 30, 35 pips, and you're in it, there's a good chance it's probably done and it's going to pull back. Okay, I bet there's a deviation level somewhere around there that can help you out. Of course, that comes with the scanner as well. But if you're trading that, and I'm telling you these ranges, these stats, I'm also letting you know where to maybe start looking for a reversal trade, where to tighten your stops if you're in a trade directionally, where to stop adding on to a position. So there's a lot of things to be aware of. Also, where to be aware of when that little spike is going to happen, that could knock you out of a trade really quick. It's like, hey, you know what? It does everything in the first 5 minutes. Well, that's great if you're in the right direction. If you're in the wrong direction, you could lose 50 pips in a matter of seconds. So when I say 5 minutes, sometimes it's minutes, sometimes it's seconds. So you want to be aware of when those buses are coming so you don't step in front of them when you cross the street. Or if you know they're coming, how can you take advantage of them? When should you stop entering? When should you start taking profit? When should you look for reversals? There's a lot of little things like that. There's other traders I know that take these news trading plan, which is very basic, that I give to you, and they'll watch the trades, and they know, okay, the expectation is about 35 pips. So, a lot of times we only get 15 or 10, but if they see like the 35 pip mark, what they'll do is they'll go in and they'll actually look to fade the trade, okay? So that they'll leg into it, one side or the other. So there's a lot of different things that you can do with this news plan besides just trade iron condors on the news. So you can apply it with binaries, you can apply it with spreads, you can apply it with futures and forex. You can know when to hedge your trade off and how much is the hedge worth. If the expectation is a 35-tick move, okay, well, what is the hedge going to cost me? How much coverage is it going to get me? Do I just want to neutralize the trade out during this time frame? So there's all those little things you can actually use this information for. It's not just for doing iron condors. That's just one of many, many, many applications on applying this information. And that's really what diagnostic trading is about. It's about teaching you to look at the market in a way that other people look at the market, not just the way that you look at the market. Look at it how fundamental traders, that's what this is right here, okay? Look at the market. Look at how statistical traders look at the market. That's where I go into the deviation levels. And that's a massive, massive piece in trading that so many people just leave out and really miss out by doing. Here's the Russell today. We go in and look at it, and if I widen up the bars for you so you can see them a little bit clearer, right here, and just to show you, look at what we got. Moved right down, literally, 1118.9 was the expected movement for the day. We got down to 1118.5, and we turned right back around. If you knew that, you wouldn't be adding on shorts at the bottom of the market. You wouldn't be going short again here and here. Like right there, I got another short signal. Guess what? I didn't take it. Why? Because I'm at the expected move of the day. I'm looking at the market how a statistical trader or algo looks at the market. So I'm one step ahead. And I can know, hey, this is not the time to add on. This was the time to go short, not here. And so adding that fundamental piece in, adding that statistical piece in. So many of you have the technicals down. Some of you have the seasonals down. But you have that fundamental and statistical part down so you can be one step ahead. That's what diagnostic trading is about. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're back here to the Diagnostic Trading Hour. And so we're just rolling through each one of these, checking them out. And we got tomorrow covered. You got your rate statement, your cash rate, exactly how to trade that. And, like I said, we got not only do we have the Iron Condor, but we also have the straddle. So Iron Condor is where you buy the lower spread, you sell the upper spread. Okay, the straddle is where you buy the upper one and sell the lower one. What's the difference? Iron Condor want to make money if it stays in between. Iron means basically collect premium. Okay, so I want to collect the premium. And the time passing by. And so you want to bring that money in on that trade, whereas the straddle, you want to collect the move, the breakout. Okay? You don't care if it goes up or down, you just want it to go far. And so by combining the two, it can be pretty cool, because if you end up profiting, on the range-bound one between like 1 or 2 a.m., and then, it helps hedge and cover off that big breakout trade. People go, what if you lose on both? Well, if it breaks out really big on you really fast, that straddle is going to be making money while that iron condor is losing it, or vice versa. So, but sometimes you can actually make money on both, and one can cover the other as well. So it's a really cool way to hedge off. It's basically a straddle, a straddle condor. If you use them with binaries, it's called a strangled butterfly. So where you go in and you buy a binary above, sell binary below, and buy another binary below and sell one above. And so you're strangling the butterfly. But anyway, so a lot of different ways. And they're called options for a reason. You can combine it in a lot of different ways. I try to give you a simple method with statistical backing on it based on fundamental time, so you don't have to spend a lot of time doing it. I've done the research for you. And so you can learn how to do these trades. And that gets you going, gets you started. And then you can start getting creative with that palette as you start understanding how to use the different options available to you. Start going, what if I did this? What if I did that? And it's really fun. It makes everything else boring when you start realizing how many choices you have with options, because you can make money in so many different ways. It's not just buy or sell, which at first can feel intimidating because buy or sell is so much easier. But it's also harder because it's 50-50, right? I mean, no matter what your now you may have a probability of 80% over 100 trades, whatever, good for you. But it's still, in a sense, it's a 50-50 because it's a buy or sell. Either it went up or it went down from where you bought it. Whereas if you have, premium in your favor, there's other things you can do. Or if you can make money in both directions, things like that starts adding to your probability, potentially, of success. As long as you have the statistics in place on how far you should expect the market to move, and as long as you know what reports to pay attention to, maybe which ones to avoid. We talk about that sometimes. We're not doing this one because nothing lines up on it. So you want to have all those little pieces in place. We're going to have the GDP coming up. It's like tomorrow night is going to be our main report that we're going to be looking at. Will be, again, the GDP. We got, then we'll have PMI for Wednesday morning. And ADP employment change, trade balance reports, overnight rate for Canadians. We have a lot to cover tomorrow. ISN non-manufacturing. So there's a lot of trades coming up in the next 24 hours on the show tomorrow, so make sure you tune in and get the stats on those to be ready to go. And we'll have another big full show the day after that, because we're going to have the British bank rate, the European bank rate, building permits, jobless claims, IVPMI. And then Friday we're going to wrap it on up really strong. We're going to be diving on into CPI over on the dollar franc. We're going to dive into employment change and trade balance in Britain with the NFP reports. So lots we can do. And I hope that you're starting to demo trade these. It is worth your time. They are really easy. They're really boring, which is great. You can put them on and you can enjoy your day, okay? So it's something that's definitely something that you want to go in and spend a little time learning how to do. Hope you all have a great day, and I will see you right here tomorrow on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.